Hello everyone and welcome to our latest episode of our podcast here at Probinex. My name is Ondřej Koraba and I'm from the marketing team, and here is Tomáš Hucík. He's our head of our customer support as well as the trading frontman of our trading team. Hello Tom, how are you today?
My pleasure, as always.
Alright, and today we're going to discuss something which is very important in the world of cryptocurrencies. Is the one thing that is moving the needle of the whole industry right now, and that is the ETF for Bitcoin and other cryptocurrencies. So today we're going to discuss this, and I'd like to ask our expert on...
It's such a long time since I was called an expert, but thank you.
All right, so Tom, can we just go a bit deeper into this ETF thing, like what actually happened, what it is?
Okay, so we can start from the start, or start from the beginning, definitely. Later on, we can move on to, I believe, more, let's say, interesting things for the future, I believe. But what happened basically is that on 11th of January, SEC approved ETFs for Bitcoin. That means exchange traded funds for Bitcoin. Basically, to put it very simply, there is option now to trade Bitcoin funds on classical exchanges.
Mm-hmm.
You will be trading funds that invest directly into Bitcoin, that directly buys Bitcoin, and you can trade those funds itself. Why would you want to do it? Well, maybe you want and I want, but there are institutions, banks, funds that may, for one reason or the other, trade the standardized ETFs instead of physical Bitcoin, because with Bitcoin there comes this question of safety, the custody, self-custody, hard wallets or something. This way you can trade the exchange traded funds directly, so you are exposed to the price of Bitcoin, you are exposed to the Bitcoin, but it's not the physical Bitcoin, or apparently this is physical Bitcoin, it's not the Bitcoin itself, it's the ETF, basically.
This is a representation of that. So, like, the biggest advantage is it's mostly for the retail field?
I would say it's more on the contrary. I would say more for the professional side, or professional investors who don't want to deal with the self-custody questions. They are not sure how the crypto landscape, laws around crypto are evolving, but there are clear rules about investing into ETFs. So there is also one of the boundaries that were kind of crossed this way, that the huge funds, family offices, banks, they can now safely get exposed to Bitcoin without the risk of some insecurities or being unsure of what is going on in the crypto world, in the crypto space.
All right, and as you said, it was in January. Now we're shooting this episode in February.
Yeah, exactly.
It's pretty much the end of February. So let's look at how is it looking right now.
Well, I would say that most professionals were kind of surprised, or the Bitcoin maxis were pleasantly surprised how it is going.
Mm-hmm.
To be honest, and kind of prep myself up a little bit, I actually predicted this. If you remember, in our Telegram group during Christmas, I kind of tried to predict how the price movements.
Yeah, you can find Tom's post in Telegram. We will add the link to the description of this video.
Yeah. So I kind of tried to predict how the price might move, and actually I was kind of correct. Basically, after the ETF were approved, immediately the price jumped high, but it started to go slowly down, since people are kind of realized, it doesn't change that much in the first few days, and now the price of Bitcoin started to rise back again. Well, there are two things that basically caused the initial drop down in the price. The first would be like the retail reaction when there was the initial hype, and then they realized, but nothing changed that drastically. But also, Grayscale Bitcoin Trust, one of the companies that were awarded with the ETF, started to sell their Bitcoin. It's not their decision, as like they are doing this voluntarily, but their clients want to cash out. So Grayscale Bitcoin Trust, now ETF, have to sell out, and they are constantly selling Bitcoins every day. So during the first 10 days of these ETFs being approved, there were roughly 5 positive and 5 negative inflow/outflow days. So 5 days of positive inflow, 5 days of negative outflow. But later on, it's kind of almost like the Grayscale Bitcoin Trust clients don't want to sell that much of their Bitcoin, so the selling of GBTCB kind of slowed down. But the pace of buying of the rest of the field actually picked up. Mostly in the lead is BlackRock, right, and Fidelity. Those two companies with their ETFs are in the forefront of buying. So we had, I believe it's now almost a month, from 25th of January until yesterday, I believe there were like 20, all these days in consecutive were in positive inflow. That means that ETFs bought more Bitcoins together than sold. Basically only one was net selling, that was the Grayscale Bitcoin Trust, and the rest was buying. So the 21st of January was 2 days ago, I believe.
February?
So, 2 days ago. 2 days ago was the first day when the net flow was negative after some time.
So a long time of rising.
So that means basically that those institutions, those banks, those family businesses, family offices, they want basically exposure to Bitcoin, to simply put.
So it suggests that there is future for Bitcoin.
Yeah, definitely. I would say that it kind of suggests that people are realizing now, and it makes sense, right? That as the pace is growing up, people are now realizing, it makes sense, right? Because it's understandable that after the Bitcoin ETF is approved, like if you are some mid player, like you are in some tens of millions of dollars or hundreds of millions of dollars, some kind of mid player, right? You don't want to jump on the bandwagon too soon. But now it's month past, and you realized, it's really picking up the pace. Bitcoin ETFs currently are around 30% of gold ETFs, of value of gold ETFs. So you it's not some kind of you cannot say that this is a fluke, right? Gold is a huge commodity, and Bitcoin is 30% of the value currently, valued, if you would calculate market caps of gold versus Bitcoin. So
it's not a chance that Bitcoin is called digital gold.
Of course. You can clearly see that why this is happening. Well, of course, nobody can predict the future.
They still can dump it, right?
That can happen, but the demand is there for now. It can be clearly seen, and it doesn't look like it's like significantly slowing as of now, obviously.
All right, now would you dare to kind of predict how it's going to go in the next few weeks or months?
Yeah, this is where it puts me on the spot, right?
We're gonna drill you a bit.
Yeah, of course. Like all the time when I watch experts on some topic and they don't want to give precise answer, I'm always like, give us a number, give us something. But I understand it's you need to understand it's quite hard to pinpoint what could happen. But we need to understand. Everybody needs to understand, and I will leave the math to the listener. Basically, these are the facts. There is or will be only 21 millions of Bitcoins, right? Amount of people on Earth is rising, and we are currently counting that only few hundred millions people maybe own some cryptocurrency, right? So if the number of people who wants to own it will go up, there's quite a good chance the price will go up. And the price itself is not the most driving factor. It's a great advertisement for Bitcoin. This is the price going up is the greatest advertisement for Bitcoin, obviously. But the use cases when the companies, when banks, when countries realize this is valid investment opportunity, valid commodity, they will buy it, be it through the ETFs, be it directly from the market in the spot, and they will realize sooner or later, basically, because they are already realizing. That's why the ETFs were approved.
But there's also going to be a halving in a few weeks. Like, do you expect this will have any impact on the whole situation?
Well, some people say that halving is kind of fulfilling prophecy, right? Or prophecy, but there is fundamental underlying value in halving. That is that the rewards from block mining will be slashed to half. That means that the inflow of newly minted bitcoins into the circulation will get lower.
Mm-hmm.
And you doesn't matter what do you think about halving, that if it's priced in already, that means that if everybody knows that this will happen, the price is already calculating it. But the fact is, this is fundamental fact that there will be less bitcoins going into circulation.
So we'll decrease the supply.
Not really decrease the supply itself, because the supply
the
will be there, but the daily or daily income of freshly new minted bitcoins will be lower. So basically there will be less of those coming,
which can really affect the price.
Definitely. Well, as the more buyers will come in, this can affect it greatly. Also, if you look at the on-chain data, you can see that that the bitcoins are getting off the exchanges, right? So if you want to sell your bitcoin, you would send it to exchanges, but it's otherwise actually the bitcoins are coming off the exchanges. So people are preparing, storing their bitcoins in their hardware wallets to keep it safe. They do not want to sell it currently, at least.
Right, this was for the Bitcoin and its ETF, but Bitcoin is not alone in terms of ETF. So who's the other candidate here?
Yeah, this is more speculation, let's say, harder to predict. If I had to guess, it's 50-50 if ETF for Ethereum, ETH, the second biggest cryptocurrency, will get approved currently. The first applications are due to be approved in May. So SEC had to decide about those in May. But they can still deny those, right?
Mm-hmm.
But there are more and more applications after it coming. So if they decline some in May, they have to again decide again in June and July and so on, because there are more and more application. BlackRock, Fidelity, biggest players in the world, are applying as well. As you probably heard during the Bitcoin ETFs application mania, BlackRock have 99% success rate of getting applications approved. So if they're good approve Bitcoin, there's a chance they will get approved.
Too big to fail.
Yeah, exactly. Like the Ethereum application approved as well. But it's complicated, right? So here's some numbers. I checked those by myself this morning actually to be on point, right? So there's like Ethereum market cap is maybe 30% of the Bitcoin market cap, right?
Mm-hmm.
But the Google Trends results for Bitcoin and Ethereum is like only 1/6 of Bitcoin searches are Ethereum searches, basically.
Mm-hmm. So it's 6 times higher.
Yeah, the Bitcoin searches are 6 times higher. So it's like Ethereum is significantly less known. So if you would ask an investor, do you want to invest in Bitcoin? He will probably say, yeah, I'm thinking about it. But if you ask a random investor, do you want to buy in Ethereum? You might get the answer, I don't know what Ethereum is, right? So it's hard to predict what will happen to the price of ETH if the ETF will get approved. Who would want to buy it? Will it be only more specialized players? More risk-prone companies, banks? Will the pension funds, will the family offices try to this second biggest cryptocurrency? Right, it's hard to predict.
That's quite a lot of questions, I guess we'll see in the near future.
Yeah, there's like a lot of things to thought about, because Ethereum is yield-bearing asset. In this, it's more almost like bonds or stocks maybe, that it actually produces yield. Currently, it's more than 4% a year paid in ETH itself, right? It's produced from staking Ethereum to secure the network, to secure the proof of stake consensus. So in order to produce new blocks on Ethereum, you have to stake Ethereum for validators to approve new blocks. And it's producing 4%. So when you think about it, currently ETF issuers are making money only on fees, right? BlackRock, Fidelity, you name those, they are making income on fees. But here, if it gets done correctly, I'm again saying correctly as there's no correct way, but if it gets done this way, there's a chance that the operator of the Ethereum could theoretically stake some of it and earn 4% yield. Well, that's quite a lot in comparison to 0.2, 0.25, 0.3% that is currently fee on Bitcoin ETFs. Here it would be 4% directly of this income from staking itself. So this might be kind of interesting to see if ETF gets approved, if there won't be kind of like a push towards the Ethereum ETFs to buy it, because it gives you more money, to put it simply, right? It can earn
more
you
sources of income.
Yeah. And as a portfolio manager, portfolio managers love, and I can tell it from our own company, our experience, right? As we do in Earnia, for example, like yield-bearing assets are the best one. Basically, you are not waiting only on the appreciation, but you are already appreciating just by holding it. So
do you think the big players are aware of this?
They will, definitely. The thing is, if it will be possible, if this will be the option, right? So, because there are risks, obviously, with staking, with validators. There you are basically absorbing more and more technical risk, right? It's one thing to hold Bitcoin in some kind of secure hardware wallet, vault. I don't know how Coinbase, that's used mostly by these Bitcoin ETFs. They use mostly Coinbase as the operator or as the storage for their Bitcoins. But now with Ethereum ETFs, you would have to stake it somewhere. There's another risk you need to take. So we'll see if this will get approved.
We'll see is a great phrase here to kind of get to the end of this episode. We'll see in a few weeks to discuss it all, how your predictions
I'm looking forward to it, of course.
All right, so thank you everyone for watching, and see you in the next episode.
Yeah, goodbye.